Hello, everybody. This is Stephen Mead here with Domicile Real Estate. I know this is on, usually record these postings to my personal pages as well as work pages. I have another Southern California housing market update for you. Obviously with coronavirus, we've been doing these a bit more often weekly, and I think it's important to compare these statistics. The other thing I want to mention is just maybe 30 seconds of background. I'm not a practicing economist. I'm a real estate broker and I own domicile real estate, but I did go to school for economics. I'd say my short-term educated guesses are pretty good, or at least pretty informed. And I do compile my own data for these. So I don't take these graphs or anything from anybody else. My data is based on Los Angeles and Orange County. So I combine that data together, especially I live in Long Beach, and I think a lot of people, cross between those two areas and cross shop. So for example, if you are looking at a house in West Garden Grove, you might also be looking at a house in East Long Beach, even though those areas are maybe 10 minutes apart from each other at most. They're in different counties, but that data is actually very similar. And one of the things that's been interesting about these market updates, and I always say what we're trying to do is help people answer some fundamental questions. Probably the biggest question is what's changing or what's not changing, right? Like what's actually happening in the minute. The second thing that I think a lot of people want to know, and that I think is really curious, is I get the feeling that there's been this notion of waiting for the other shoe to drop. And what I mean by that is, our initial data has been pretty good as we go into, everything since the stay-at-home order. We're closing in on 2 months under a stay-at-home order, or at least 5 weeks, 6 weeks or so. And I think because the prices have been holding steady, people have kind of been waiting for this other shoe to drop. Yes, we know the volume of transactions is down, but what about prices? And I think there's been this notion that these are about to drop. And I think that's kind of one of those questions we're trying to answer. The other is probably a really big question, and I think that is, what should I do? A seller who's thinking about selling a house, what should I do right now? If I'm a buyer who's thought about buying a house, what should I do? And we're going to try to answer those questions for you today. I think I'm going to jump right on into the presentation here as soon as my computer stops giving me my beach ball of death here, so I can finally share the screen with you guys. I've got some graphs and some things prepared for that. Let's see, it's not being terribly happy here in terms of getting rid of that prompt for me. Let's see here. Can I move my window? Yes. Let's see, we've got some technical difficulties. I'll see if I can get this to screen share, but I'm on a Mac here, and see if I can get this to screen share, but I'm on a Mac here, and if you've ever experienced the beach ball of death, yeah, then you probably know what's going on. So, alrighty here, looks like we are gonna be able to get this up, so let me bring these here. Let's see what we can do. All right, so if we are looking here at this first graph, this is our new listing. So if you've ever heard supply and demand, we're talking about the supply side. This is new listings coming on the market, measured, if you look on the right, by each week. I've divided this into under 1 million and over 1 million. And again, this is for Los Angeles County. And what have we seen? We have seen an increase, a steady increase in both price categories. If you look at that blue line on the left, you'll see we're still well below sort of what we would normally expect or what was from the pre-stay-at-home order. But we have been seeing gains for this, and I think that's really the encouraging sign, because it means things are moving in the direction of a more active market, not a less market active. If new listings is the supply side, then new escrows is the demand side, right? These are people who have signed a contract, they are excited to buy a house, and they have opened escrow this past week. And again, if we look here, we see increases in this category too. That continues on with our narrative that we are, in fact, in a market that is becoming more active, not less active. And I think that's a good sign for things. We're going into summer. I think people mentally, what we're hearing on the street is people are no longer in that position where they feel like the sky is falling. I think people are still very concerned. People are still watchful. They are very mindful. but they no longer think that the sky is in fact falling. And I think people are starting to make longer term plans. That includes thinking about vacations, which I know I am doing, but a lot of other long-term plans as well. And this is probably the graph that's really the big one. And this is sort of the right now snapshot of what is happening with supply and demand in our market. And it's called the absorption rate. It is very easy to calculate. Basically, we look at all the new homes that came on the market this week, all the new listings, and then we look at all the properties that went into escrow and we calculate a ratio. So are we adding new properties for sale faster than they are going into escrow? And if so, which is pretty normal actually, because not every property sells, at what rate? I will tell you this, if you look, we see a little bit of a downward trend in our graph. And I think I know I am concerned with that downward graph as well. However, one of the things that I did is I thought a little bit differently this week. I thought, well, these numbers are great, right? We're hovering right around 60%. We were in the low 70s pre-coronavirus. What's a normal absorption rate in our market? Because remember, this isn't dependent on how active the market is. Because you could have, for example, one new listing and one new escrow, and you would have a 100% absorption rate. So I thought, let's take a look back to 2019 and see what was going on in 2019. And I'm gonna do something real quick right before that I go ahead and share this. I just want to give just a couple little words about this data, and I think something I always think that's important to mention. I can tell you a lot about what's happening right now up to this minute. I can tell you exactly how the market feels. That is not the same as being able to predict the future. And I think, that doesn't mean we have some good indications. Do I think our market is going to fall flat on its face? We're going to see a 10% price decline in the next month? Probably not. I mean, it's possible, but that's a very low likelihood. But at the same time, it's important to know that these data, these are indicators, right? These are things that lead us down a path of understanding where we think we are, where we think we're going. They are not absolute predictions of what is going to happen in the future. So with that, I'm gonna kind of get you to sort of our historical graph that we did here, where I looked at 2019's data. And what I did is I calculated this absorption rate for the first week of the month in each of the months of the year until now. And if you look at this graph, you'll see January is typically one of those months where we add a lot of new inventory, but not a lot of houses go into escrow. Things get better in February, March, and then we kind of have this sort of even out period last year. I didn't run this for any years other than 2019, but anecdotally, I would say this is pretty much the way it works. We sort of ramp up as soon as the weather's not terrible, and then then we kind of glide a bit with sellers and buyers kind of equally. That supply demand relationship doesn't change a whole lot. And you'll see that our historic numbers kind of in the low 70s is where this ends up falling. I didn't add the data labels, so I'm sorry about that. But you'll see we're normally about in the 70s. And, I normally would be a little bit more concerned about right now. This week we were 61%. But I think it's important for people to understand that, these numbers, a 10% difference might not be quite as big as it seems. I'm a little bit more worried about the trend than I'm worried about the absolute numbers. And the reason why that is there are a lot of market dynamics to absorption that it's important to sort of just keep in the back of your mind. And probably the first of which is how motivated are sellers in any given market, right? Do you have people that absolutely must sell? If they must sell, they're going to lower their prices. I would have thought that we saw a lot of people going on the market with must sell, but in fact, I'm noticing it's exactly the opposite. A lot of the people that are going on the market are saying, well, I'm going to put my house on the market. I think it's a great house, and we're going to see what happens. Maybe we're moving this summer. Maybe we're not moving this summer. We're going to let the market decide whether we're moving this summer. And I think, I just went on an appointment yesterday where that was, kind of something the sellers had in mind. They've got an idea on a price that they're looking for. And if they're able to get it, they're going to make a move. And if they're not able to get it, they're going to stay put. And when you start to see a lot more of that behavior, you tend to get a lot lower absorption rate, and that's pretty normal. So I'm not super concerned about the raw numbers. I am curious to see this trend. Are we going to keep going down below 60%? Or are we going to start to bounce back up like we have with the number of listings and the number of new escrows? If you are a regular watcher of this, you know that after we talk about absorption rate, we usually talk a little bit about pricing. And this is sort of the big one, right? Like, what are prices doing? And if you look our over 1 million category, you know, those are kind of all over the map. And part of that is because of a lower sample size, and also because that's 1 million plus. That means 1 million, that also means $20 million properties. And there's just a really big range. If you look at our under 1 million though, you'll see a bunch of bars that look really close together. And that's not by accident. We did slip this week in our pricing, like $4,000 versus last week. But you know, you have to understand, when your median is 605, 610, that kind of that's not even a 1% shift. I mean, that's such a minor shift that I can't really call it data. If you look at this graph, I think there's one word that comes to mind when I think about pricing for under $1 million properties, and that word is steady. I don't think it's changing. And then finally, we have our days on market. And, you know, we saw kind of this initial drop in days on market as soon as we went under a stay-at-home order. And then things have kind of gone back up and more or less evened out. In the over 1 million market, it is shockingly steady that way too. I think when you look at these graphs as a whole, and I'm going to give you some conclusions and some kind of thoughts about maybe your own situation. So probably the biggest thing that I'm going to tell you with this is not to say that tracking the market doesn't matter, but I would tell you, if there was a pie graph of what data are you using to make your decision, and obviously if you're looking to buy or sell, there's a lot of things that you're considering. How is the market? That's something you're considering. How is your personal life? How are interest rates? These are all things that are going to factor into your decision. I would say right now, the bar graph of what is the market doing is on our little pie chart. I'd say that's going to be a pretty small slice at the moment. I think this market is a lot more about your personal situation and what works or doesn't work for you. With that said, I will tell you something, and we're working on this maybe for next week. We might do another little video in between. Is I've been tracking the idea of affordability for first-time home buyers, and it looks like the data is really good, meaning it has not been this affordable for first-time home buyers in a couple years. Your situation relatively is better from a payment perspective. So expect some more details on that. Obviously, as usual, we love questions. We love concerns. We're probably going to go ahead and post this on a regular page with captions so you can watch it at work with little subtitles on it. As usual, stay safe, and we're here for you if you need anything. Have a great day, everybody.